1, 2, 3, start. Hey, Michelle, thank you for joining today.
Hey, Kaye. It's so awesome to meet you here in this park and having a beautiful summer day.
And it's been a while since we had our last collab, and it was like, I think last year, probably almost an year since we haven't like really connected. And so it's great to meet you again. And I know that you have a lot to talk about, especially on the market. So
yeah.
So for folks who have not seen Michelle's channel, please make sure I'll put the link in the description. It is Michelle Markey Investing.
Yes.
And you should definitely check her out because it's a very, very good channel in terms of the value investing, in terms of how you should invest, whether in a bear market or whether in a bull market. So whichever type you like, make sure you check out Michelle's channel as well.
And also check out more of Kaye's videos because he makes such great observations and there's so much we can learn from Kaye. So definitely visit more of his videos too.
Awesome. All right. So for today's content, we're going to wing it today. We will talk about the market. We'll talk about some tips and tricks on how we are investing. We are a little bit different types of investor, but I think both of our goals or everybody's goal is to make sure that our investments pays off. It's not a gamble. So Michelle, if you're okay with it, I'm going to start with a couple of questions and take your take on it and see how things are proceeding. So if you don't mind, what is your view on the current bull run that we just had? So S&P 500 was around 4,800 in the start of the year. It went all the way down to the bear territory, about 20% down. And now again, it's back to 4,200 level, which is give or take 11-12% down from its January high. So what are your take on it?
Well, basically, I think we're in a massive bear market rally where it just seems like we're having a little bit of a dead cat bounce right now. And even though we've retraced 50% from the previous low where the S&P 500 went down as low as 3,666, and now it's back to like the 4,200 and then like around 4,300. I feel like a little bit of a temporary bull run because a lot of people in the markets are betting that the Federal Reserve is going to have to cut interest rates next year. So I think that made a lot of people excited about, it's time to get back into stocks because if you think that the interest rates in the future will be back to 0%, you think that stocks are cheap right now. So that's why I think a lot of people have been piling in thinking that this is a good buying opportunity. And it might be. I could be totally wrong. And so could Jeremy Grantham and Michael Burry, but who knows?
So one of the interesting observations that we are seeing these days is if you hear earnings calls, right, most of the companies have continued either with their layoffs or hiring freeze. And the forward guidance is what matters for the Wall Street. It's getting softer. So back in April, when we had inflation at 8.5%, it was doom and gloom, world is coming to an end. We had an 8.5 now. People are like, all right, great, that's it. We have reached the inflation peak point and everything is hunky-dory. So if it's a dead cat bounce, are you investing currently or are you completely staying out?
Well, there's some things that I've been wanting to buy. Like I was really tempted to buy Google when it went to $105 and that's after split. And even though it was there, I was thinking like, if earnings are not going to be good news that much, then I was thinking maybe it'll keep going down more. And then maybe that'll be even more of a buying opportunity. So I waited and then I happened to be wrong because now Google's at like 120 plus. And so I'm just sort of thinking like, it's really tempting. Like I would love to get into certain stocks right now, but some of them are a little bit going back on the upper end of the price that I would rather pay. So I would like to, but I'm sort of waiting. There were a couple I did buy, like, I try to keep some of my purchases a little bit of a mystery, but like, I don't know. We'll see if there will be more buying opportunities for some of them.
Now, since Michelle talked about Google, I do have, this is a public PSA. I need to ask you, are you looking into Apple?
Well, I like Apple, but I kind of agree with Phil Town where it might be a little bit overpriced. So I want to buy some Apple too. And I saw that maybe Warren Buffett bought some at a maybe 20% discount. Yes. So while he bought some, to me, it's sort of like a little bit of a maintenance and maybe he regretted selling out of some of it like a couple of quarters ago. I think that he's just kind of collecting that dividend from Apple. I don't know if he's really super aggressive or super excited about its stock price because it's actually recovered one of the best from the recent lows. So it may be one of, even though it's a really great anti-fragile company and we should all want to own it in general, not like market advice, but just as a really good company, it's hard to argue against Apple, but I would want to buy it when it's on sale again, like if I, at least 30% off or more, and it's recovered from that low, so I have to wait until it comes below 140 again.
I'm totally with Michelle on this one. I think Apple is, if I'm not wrong, is only down 4%. I will, if I'm wrong, I'll put the correct number right here. But I think there is, it's no point in buying Apple at the current levels unless you are trading. Again, it's not a market advice. Do what you like with your own money. And there are birds behind us. So, Michelle, next, let me ask you this. Then, if you are not actively investing, how are you really approaching the market? Is it you are keeping, are you heavy on cash and waiting for the right opportunity, or you are slowly nibbling away on some of your stocks that you love or you want to hold it in your portfolio?
Yeah, I mean, if there are a few stocks that are on a sale enough price, I try to buy a little bit of them, but for the most part, I'm still holding a good amount of cash.
I see. And has that fluctuated this year, or have you already been in cash since last year when we last spoke?
I've had like a good chunk of cash for a while. Like even last year and in 2020, I still had plenty of cash because I keep waiting for the big one also. So, you know, if people like Jeremy Grantham think that we might not bottom until the S&P 500 might reach 1900 or 2000, and Michael Burry, I think, is maybe expecting a market bottom in the 1800 range. So we have a lot of down to go if those would be the true market bottoms when there's a real market capitulation. So I'm not in a rush to buy, knowing that it could go down more. And, you know, of course, I could always be wrong. And that's why I also have alternative investments that I'm in, like one mutual fund that I'm in that will hedge against me if I'm wrong in my estimations that I'm waiting for 50% off on sale of things that I'd like to buy. But if not, I still will do okay because there's one mutual fund I believe in that I'm still invested in, so it's okay. I like kind of hedge my bets a little bit there.
So that's a great point, Michelle, you bring up. You are talking about not just your regular investment, but you're talking about hedging. Now, everybody has a different way to hedge the portfolio, and you're using a mutual fund as an instrument to hedge. How would you recommend, you know, investors who are either new to the market or are not very familiar with the word hedging, or they don't really understand the concept of hedging? Can you like a little bit throw some light on it?
Well, I mean, hedging is just doing something that you wouldn't maybe have as your number one ideal strategy. So I don't know if a lot of people have thoughts about, you know, what is their preferred investing strategy. A lot of people might not have a preferred strategy, and that's okay. Like by default, Warren Buffett recommends that most people should just invest in the S&P 500. So if you're buying an index fund, just get a low cost index fund that maybe charges you 0.15%, like almost like nothing of a charge, and then you have a way to be invested in the market. And even though that's super diversified and more diversified than I would be personally comfortable, you can't really go wrong because the US stock market has averaged at least 7 to 10% for a long time. And in recent years, like I want to say over the last 10, 15 years, it's done even better, like probably between 10 to 13% on average. So that's incredible. So if you don't know what to do, just go to one of the popular brokerages like Fidelity, Vanguard, Charles Schwab, TD Ameritrade, and open a brokerage account there. Ideally, a tax advantage retirement one like a Roth IRA, and then invest in a low cost index fund if you don't know. But when you hedge your bets, that means you're trying like different strategies. Like I could also be doing some options trading to sort of hedge against. And I've done a couple of those, like selling some puts here and there of stocks that I'd like to buy at a lower price. So I lower my cost basis if I get put the stock and it's okay with me. So that's one way, but that's a little bit of an advanced strategy that not everybody has to do. And I certainly suggest that nobody do options trades unless you really know what you're doing.
Exactly. So I'm totally with her, Michelle, on that. Michelle, since we've talked about Warren Buffett and we talked about a little bit S&P 500, let's go back to what the banks and these analysts are talking about. So what I have started doing is I've started tracking their predictions. So right now, Oppenheimer says that by end of the year, S&P 500 will be at 4,800. Bank of America and Credit Suisse are like around the 4,200 mark, and I'm forgetting the another company. It's definitely in one of my videos. Check it out. They are below the 4,000 level. Now, and this is by end of the year. What is your outlook on S&P 500 by end of the year? Since everybody's making a prediction, let's go with a prediction over here.
Well, I mean, there's what I would hope it would get to is like I want to buy stocks on sale. So to me, the lower it goes, the better. But it's hard to say. I mean, like I don't really know what some of these analysts are basing their estimations on. So it could go either way. Like it's such a crapshoot where some of the market will end up. And you know, I think a lot of the analyst estimations are all over the place. So it's just it's anybody's guess. But to me, I would be happy if it could get down to 2000, but I don't know if it will reach down to that level.
So keep in mind, folks, if you are looking to invest, if it goes to 2000, you should definitely be buying stocks.
Oh yeah, I think Warren Buffett will deplete most of his cash pile if it gets down to the 2000 range.
Now, I think talking about Warren Buffett right now, Warren Buffett has been actively buying Occidental Petroleum, ticker symbol OXY. What are your thoughts on that?
I mean, if you think that oil prices are going to stay high and you want to collect a sweet dividend, it's not a bad bet. Like some people are doing that, but I just don't have oil companies in my circle of competence. So it's not something that I'm comfortable investing in because I don't know when it will turn. Like we've already seen oil prices come down a lot. Like where we are in New Jersey, oil prices are only $3.65 per gallon at one of the cheapest gas stations I've been to lately. Mm-hmm. And that's Costco, which tends to have some of the lowest prices for gas. So it's both one of the best quality gas you could get and also cheap. So you can't go wrong. And that's totally in line with what Charlie Munger does too. And so, you know, if oil prices are going down, have we already peaked in a sign where, you know, if oil prices peak, that means that sometimes when it's rapidly going up and then it starts going down, a recession could be on the horizon. So what I'm thinking is that perhaps if oil prices go down and then even though oil companies are making money hand over fist right now, mm-hmm. for how long can that continue? And at this rate, Warren Buffett, I think, just got clearance to buy perhaps up to 50% of Occidental shares. So wow. If he does that, could perhaps Berkshire Hathaway be taking over the oil company someday, just like they did with Geico years ago? So I wonder if they would rather just own the whole company so that they can keep getting some of that dividend money from Oxy if they own it outright. Who knows? I have no idea where that investment's going to go, but I would rather just own Berkshire Hathaway and not necessarily the oil companies because I don't know when their good times are going to end. And so I'd rather just pay attention more so to Berkshire stock.
Now, since Michelle, you're talking about Berkshire stock, which particular ticker symbol? Because there are two ticker symbols here.
Oh, I'm not rolling in it to buy Berkshire A. I would only buy Berkshire B. So that's okay. The one that I talk about.
Awesome. So it's BRKB. That's the one you should be buying. Now, since we're talking about the market in general, a lot of conversation has been happening around the inflation, which of course peaked last month at 9, and now it's 8.5. The last report came out. The next CPI comes out next month. So a lot of predictions are around that. How do you see it playing out?
Well, I mean, so many people seem to think we're quickly going back to 2 to 3% inflation pretty soon. I mean, I think that's a tall order if you think about what it will really take to bring it down. And the Fed has barely started selling their treasuries and their mortgage-backed securities. And also interest rates are only at the 2.25% to 2.5%. So it's going to take a while before the economy really feels that. And so it's starting to happen, like consumer spending is starting to slow down and oil prices went down. So I think some of that helped to bring the CPI inflation down from the 9.1 to 8.5. But maybe, you know, it will still stay kind of high. Like I wouldn't be surprised if next month it's only at 8% instead of the 8.5, but it's still elevated. Like that's still 4 times as much as what the Fed's target of 2% would be. And also they usually go by personal consumption expenditure inflation, exactly. Not CPI, even though everybody talks about CPI. But, you know, if you also look at some other calculations of inflation, like shadowstats.com, inflation could be way higher than what any of us are being led to believe. Exactly. So we think it's only at 8.5%, but it could be double. It could be like 17%. Who knows how bad it really is? But I think that like we'll have to see, you know, if inflation can come down, because like if you look at some other measures like the 10-year break-even inflation rate, people think that inflation will be back to like 2.5% within 10 years, which is just, I think that that's really optimistic thinking. And I've like read some things by Larry Summers where he believes that the Fed will need to raise interest rates to above the level of current inflation to even put a dent in it. So the fact that there's a huge gap, like where current interest rates are only at 2.5 and inflation is at least 6% above that, it's not making nearly enough of a dent. So I think that we're going to have to live with some higher than expected inflation for a while.
Yeah, no, and if you really think about it, right? I mean, in your day-to-day purchases, most of the product prices have gone up. It's not gone up by 8%. It could vary anywhere between, I don't know, I've seen products that are up 20-25% markup has gone up. So so the CPI number is more of an aggregated number looking at everything. And if you actually look at the CPI numbers and you see which commodities have gone down, it's because of the oil. And that's the reason why the CPI numbers came down to 8.5%. None of the other metrics actually went down. So if it's only the energy sector that has gone down, think about this. As the weather gets cooler, people are going to start using more on the gas. The Russia-Ukraine war continues, so there is no respite on that. We are also seeing a little bit more tension in the Asia-Pacific, and I want to really touch about that as well, since now there are more companies, especially the state-owned companies from China, that are now starting to delist. I don't know if the process has started or they have just put a news out. Have you seen that lately?
I mean, we've heard about some Chinese companies, including Alibaba, be put on a potential delist list. And that could be worrisome if within a couple of years, like by 2024, according to the Holding Foreign Companies Accountable Act, these Chinese companies are going to have to provide access to audit documentation to U.S. authorities like the SEC, like to be able to see what the financials are really saying. Because if we as the U.S. can't verify what the financials really are for these Chinese companies, then they might not be able to stay listed on the New York Stock Exchange. And then that's why maybe Alibaba is seeking a dual primary listing in Hong Kong exchange as a backup in case, even though it's already listed there as 9988HK, maybe it wants to have it be a primary in case it has to delist from the US stock exchange, which would be unfortunate because if a bunch of Chinese companies are basically saying goodbye to American investors, that's a lot of money that's going to be flowing out of Chinese companies. And ultimately, I don't know if that's good for the Chinese economy. Like, I think that they need, like, we kind of need each other for better or worse, whatever your politics, whatever you believe. I try to stay really neutral, but it's not looking good if by 2024, Chinese companies either can or don't want to provide that access to the audit documents. It depends because it's a real tug of war between US and Chinese regulators. So it's a really tough call, but I hope that they will find some way to compromise and get along because I think that the world needs each other. Like Charlie Munger says, that we're better off finding a way to get along than to burn bridges.
Exactly. And I think for investors who are investing in the Chinese companies, I think Michelle brings up a very valid point. Since 2024 is when the audit requirement has to be met. It is important that if you're investing in those, keep an eye on this news, see how the development happens throughout the next year, because next year is the only year when Chinese companies will make a decision, and then 2024 is when the action will take place. We don't have exactly any date, and I'm sure, Michelle, if you track Michelle and you follow Michelle on the channel, you will be able to know exactly what's going on with the Chinese companies. All right, Michelle, next question for you. Are you, apart from, if you remove all the confusion and scaremongering of Chinese companies, what are some of the companies that you actually like from a Chinese standpoint?
Well, I mean, some of them that are interesting include some of the ones that some famous super investors like Monish Pabrai, Guy Spear have invested in the past. So some of those are really fascinating for me to study, not necessarily just put money in, but to see if I would be comfortable investing in them. And I know, for example, Monish Pabrai, he sold Alibaba because he found Tencent and he believes it's a better company than Alibaba is. And he's also invested in Prosus. And Prosus is a Dutch/South African company that's invested in Tencent, but I think they're divesting some of it. I haven't caught up on the story there, but that might be something to look into. And also, I know that Ray Dalio, he recently, through Bridgewater Associates, divested entirely out of Alibaba, but kept Tencent Music Entertainment and Baidu. So those might be some to consider. And I think Berkshire Hathaway may have invested in BYD years ago. So
Exactly.
if you're interested in, Chinese electric vehicle battery companies, maybe that's something to look into too. But I honestly haven't looked that much into Chinese stocks. Like, I would prefer investing in American equities, but they've just been so expensive. And if you may have watched one of my latest videos on Superinvestors, 13F filings for the second quarter of this year, you would probably see that a lot of these super investors haven't been doing a lot of buying and selling lately. So it's sort of hard to see what they're really invested in because they haven't really bought American stocks lately. And I mean, aside from Berkshire buying a good chunk, it's, Guy Spear and Monish Pabrai haven't been. So I'm just waiting for American equities to really be on sale. And that's what I feel actually more enthusiastic about.
That's awesome. Now, so let me ask, you are not a trader, right? You are a long-term investor.
Yeah, I prefer investing for a long time.
Do you do options?
I've done like some here and there, yeah.
Okay, but and as you mentioned a little bit earlier in the video, you did say that if you are not used to options, don't do options unless you really understand what you're doing. Is that
yeah, I agree.
So now let's talk about a little bit. Have you seen the latest fallouts of crypto?
Oh, of course. How can you not? It's like front page news of all the people losing hundreds of thousands of dollars in Celsius and Voyager.
So what are your thoughts on that? There's another big news that has come out recently actually. The FTX has, I believe the Federal Reserve has reached out to FTX because FTX was promoting that they are FDIC insured, which is not the case. So Michelle, how do you see the whole crypto space evolving, especially after all these latest, I would say, bankruptcies / scams, if whatever you want to call it?
Well, with this whole space, I think that it's really telling how, there's been a lot of sells in this area and a lot of people are feeling really shooken about crypto. So it's a little bit of a dicey area. I don't really know what's going to happen, but there's a few true believers that are still in it no matter what. But I think it's really telling when some big proponents like Michael Saylor have totally kind of like stepped down from their corporate positions, and like there seems to be a lot of depressed attitudes about it lately. And I just go back to what people that I admire say about it, like Charlie Munger and Warren Buffett. If anyone offers you crypto, just say no. Like, so I kind of think like, unless you know what you're doing and you've studied this area closely to know where there's value, I would be careful about it, because if you don't really know what's going on, just like options, it might not be to your benefit. If you're just trying to jump in because you heard someone making money in a really fast way, and it's like what they say, there's no real get rich quick scheme. So I just would say be careful if you're going to jump into crypto.
Awesome. Now, Michelle, I know that you went to the Berkshire Hathaway, I believe the annual event. Can you share us, how was it? Do you recommend everybody to go there? Because I believe it's definitely, there's a lot of value that comes out from attending events like this, but I would love to hear your opinion on that.
Yes, absolutely. If you can, I highly recommend everybody attend the Berkshire Hathaway annual meeting that happens toward either the end of April or early May in Omaha, Nebraska. And all you have to do is own one Berkshire B share, which is not too expensive. It's around $300. So that's basically your entry ticket, and you can get 4 passes to attend. So you can give them to friends and family if you want to go attend that meeting and just soak the wisdom of some of the best investors, because we don't know how long on this earth people like Charlie Munger, who are 98, or Warren Buffett, who's about to turn 92, how long they're going to still be on this earth. So I think it's a great time to just be part of a community of long-term investors who want to make money, because if you like getting 20% average annual returns, who not better to learn from than Warren Buffett, who's managed to do that for decades. So I think that everybody can benefit. And I know it's a little bit of a trip. It takes some coordination to try to plan it and go there, but I think it's super worth it for people.
Awesome, Michelle. So I definitely want to make sure that if you are going next year, I would like to, hop along with you. And you said you can own one Hathaway share, and then you would be able to go there as well.
Yeah. And then,
awesome.
If you don't want to own it forever, you don't have to. You could just own it so you can get the credentials by the date in which they would send the proxy materials to the shareholders. And you can always sell the share if you don't want to hold on to it anymore. So it's not like such a super big commitment that you have to, invest $300. Although, if you are a true Berkshire believer, you might as well hold on to it. So it's like a no lose situation, I think.
Exactly. And if you invest in index funds or ETFs, and if you actually look at the top 10 holdings, Berkshire Hathaway is always there. If you invest in sector ETFs like XLF, which is a financial sector ETF, most of the sector ETFs with financial exposure have Berkshire Hathaway as, if not the number one, number two, or number three position. So I think you cannot go wrong by owning a Berkshire Hathaway stock because, first of all, as Michelle, you mentioned that you don't have to follow what Warren Buffett is doing. You can just own what Warren Buffett, owns, which is Berkshire Hathaway. And as the company makes profits, you would get the benefit from the stock price appreciation. And now, does Berkshire Hathaway pay dividends?
No. So that's why some people might not want to stay in it, because if you want to, make money on it, the best is like if the stock price goes up, or if Berkshire Hathaway does some buybacks and then that increases your share of ownership, or if they just buy other companies or also grow organically, then maybe that's how Berkshire stock price might go up. But I think it's still great value. So even though a lot of people love dividends, sometimes it's actually better if a company doesn't give out dividends so that the company can just reinvest it. Because if you can make 20% returns on your money, then maybe you're better off getting a dividend because you know how to make more than 20% on that dividend money. But if you can't, if you don't know how to generate that level of return, maybe you're better off that the company just holds on to it. And that's been Warren Buffett's philosophy, is to do just that.
Got it. Now, are you doing options on Berkshire Hathaway? Do you know how the option chains look like?
No, I haven't done it on Berkshire, no.
Okay, got it. So definitely, folks, if you want to attend Berkshire Hathaway's annual event, definitely make sure you at least get one share of Berkshire Hathaway. Now, is there like a cutoff date that you should buy that to attend the event?
No, not really. You could own it like a couple of days before and go to Will Call, show your share proof of ownership. I made a video about all you need to know of how to attend the Berkshire Hathaway meeting if you want to check that out. And so you can't go wrong. It'll be
Awesome.
Easy.
So what I'm going to do, Michelle, is I'm going to take the video, I'm going to put it in the description. So if you are interested in attending Berkshire event next year, we'll go and check out Michelle's channel, and the video link will be in the description as well. Awesome. So that takes care of the Berkshire Hathaway. Now, Michelle, do you follow the S&P 500, NASDAQ, or do you have any other indexes that you follow as well?
I mean, sometimes I look at the Russell 2000 also, but generally I just see as a temperature gauge where the S&P 500 is, as just to see where we are in the markets. If it's feeling a little bit frothy, or if it's feeling a little bit depressed, because that in general can be a proxy for how the overall market is, since there's 500 companies in the S&P 500. So maybe it gives a clue about where the markets could be going, and that's usually why I tune into what the S&P 500 is doing.
Got it. And the next question is, this is again, if you have followed Michelle or my channel and you saw our last conversation, one of the favorite stocks of Michelle is Starbucks. How have you been tracking Starbucks? Is that still on your radar?
Yeah, I mean, I've owned that for forever, so it just kind of sits there. But one little news article I saw was that Starbucks did pretty well in its recent earnings report because their revenues were up. And a lot of that is thanks to Gen Zs still drinking a lot of coffee because they love iced drinks and being able to customize it. So that's great. I mean, of course, they say if you want to save money, then try to cut back on eating out and spending lots of money on coffee drinks, like from either Starbucks or Dunkin' or what have you. But, we have Starbucks's recent earnings to thank Gen Zers for continuing the coffee habit. So even though, I try to save money by getting my cup of coffee down to only about 11.5 cents per cup, I can't fault the next generation for continuing to give me some dividends, because without you, Gen Z, I wouldn't be able to collect as much maybe Starbucks dividends. So thank you for doing that.
Awesome. Now, just an off topic, do you grind your own beans as well at home?
No, I have like a little manual one, but I prefer getting it like ground at like the store.
Okay, awesome. And then you just make your own coffee. Perfect. So Michelle, now just wrapping up on our conversation at least, how have you seen the latest finance space in YouTube evolving? have you seen? Are you following? Are you up to date on that trend? Do you consume a lot of content? What are
Well,
your
like
thoughts?
I watch here and there, but it seems that it's a little bit of a slightly sour mood lately because advertising revenue is down. So, if there's less euphoria in the markets, then maybe there would be less shilling for crypto and other financial products that people were really enthusiastic about in 2021, with the era of meme stocks. And even though there's a little bit of some of that action going on, it's a little bit muted compared to what it was last year. So I think that that's having downstream effects to advertisers, and so like YouTubers may not be making as much as they were before.
Hmm. And then this is literally the last question I'm going to ask you. If you want to give 2 or 3 tips to anybody who wants to start investing or have not invested and are waiting on the sidelines because they are scared, not because they're holding the cash, just because they have never invested, what would be your top 2, 3 tips that you would like to give?
Well, number one of the best ways that I got into investing was by listening to the Invested podcast by Danielle Town and Phil Town. And I really recommend people check out their Invested podcast. It's free. And if you're ready to move on to the next step, also check out their Invested book. It's a great learning resource. And also Phil Town's books and Monish Pabrai and Guy Spears' books. Those are valuable to be able to learn how to invest, like some of the best investors, Warren Buffett and Charlie Munger.
Well, perfect. That's a ton of good information that we got from Michelle. So thank you, Michelle, for joining on today's episode. I hope you will like what the conversation was about, and if you like it, make sure you follow Michelle's channel as well. And I will be catching up with you again, Michelle. Thank you for joining today.
Thank you, Kaye, and make sure you like and subscribe to both of our channels. We greatly appreciate you, and thank you so much for tuning in today.